Okay folks, violence. We've got several things to discuss. Number one, an update on major plays heading into this week. And then for the main entree this lovely evening, I want to give you my thoughts on a particular 84-cent stock that should be making some pretty aggressive moves this week. Why is that? What should you know about it? And should you be buying it? Well, I'll discuss that in this video and break everything down for you. And then we will be capping off the video with a breakdown on catalysts and market-wide events to know about this week. Okay, so I want to go ahead and start with GCT. Now, GCT, the run that we saw on GCT back on Friday is quite frankly what trader dreams were made of. This is the kind of run that you see and you never want to wake up from, and then your alarm goes off and you're like, shite, the market's crashing. But at least I had that GCT run. One of the hottest trading trends in today's market environment is the trend of newly minted IPOs. You see, when you have a new stock being introduced onto the market, nobody knows what the real price it'll settle at on is. The suits can decide to some extent what they want to IPO at, but at the end of the day, the price discovery process happens after the IPO, when the shares are freely tradable. And so the minute that something IPOs, the market goes and does its work at starting the price discovery process. And if you add in a lot of hype, a lot of attention, and a financially tight market where IPOs are coming in lower and lower than what they would have a year or two ago, then all of a sudden you get the situation where IPO after IPO has these massive runs right at the beginning of open. And GCT was a perfect example of this as we closed last week. It IPO'd on Thursday and we briefed on it at just under 25 bucks a share Friday morning, and it ran up to 60 bucks at highs, which is a 140% run from the briefing price. Obviously not all the stocks we brief on run, nor is that even the point. The point is to narrow down trading opportunities. But the big lesson and the big takeaway here and why I'm even talking about it is because if you're looking for new trading opportunities, newly minted, fresh out of the oven IPOs can be a very, very powerful place to look at. I have found that usually within the first day or two, you start seeing a lot of the biggest trading opportunities. And then over the next week, you have these pre-market mornings where you start seeing some of that proof of concept. And then after market open, it goes whoop. It seems like these new IPOs are coming every week now. And quite frankly, a lot of the FDA approval plays, earnings plays, squeeze stocks are choking on the dust of these new IPOs. Now, do I think that GCT is worth 60 bucks? Nearly 5x more than its IPO price? Absolutely not. And it will in all likelihood die off and go back to the depths of hell, probably below its IPO price. And Satan's going to be looking and saying, hey, welcome back with all the other penny stock hype stocks that are now dead. This is what we've seen over and over again, whether it's MEGL or HKD or so on and so on. The runs tend to be super, super aggressive, but if you're somebody that decides, oh, I really need to marry this and have about 15 kids with it and a house and a white picket fence, if you're somebody like that, you get destroyed, completely destroyed. You thought the divorce courts were bad? Listen to what happens when you get these damn penny stocks going against you. The runs tend to be super, super fast, the opportunity great, but you are dealing with fire when you're dealing with these, and I have to stress that every video. Okay, next, moving on, what to expect with BBBY this week and the crucial levels. Well, Bed Bath & Beyond has of course gone into Bed Bath & Death mode after the Ryan Cohen sell and overall market dump towards close last week. I made a video on my full thoughts on this on Friday and kind of talked in depth about sort of the frustration when it comes down to stocks like this. But from a trading perspective, it's all about can it run and how can you take advantage of that? And it's already broke past nearly every crucial support level, and the last one left is really that previous bottom at around 9 bucks. And if you look back at previous rally cycles, BBBY is prone to residual rallies, and a lot of folks are arguing that that will happen again. Earlier this year, you had the original blip and then a sell-off, and then, of course, large runs. And then, of course, there's that speculation that, wait, if the meme trend continues and this starts re-rallying and market conditions start supporting more trends to the upside, well, all of a sudden, BBBY could use that same gamma squeeze playbook and blow through all the same price levels that caused it to squeeze a couple weeks back, or rather last week. The gamma squeeze was strong with this one, and it will be again if you go back through those levels, right? My thoughts, well, they say the proof is in the pudding, right? And I want proof and not promises. I say let other people risk their capital, let them have faith, and then if they create some proof of concept in the price, then that's when you want to start trading off that momentum. I think that BBBY is still a monster of a setup if you do get that momentum. The Ryan Cohen sell and the derailing after that was extremely unfortunate because if you actually look at the short squeeze setup, it's pretty damn solid. You have extremely high short interest, utilization's at 100%, options chain is pretty much primed for another shock and gamma squeeze. It's just a question of, will this get the momentum back? And I think there's a solid chance that it will. But make sure that you get that proof of concept first. Wait until BBBY is done with its death spiral, and then once you've already started seeing that little proof of concept, that's when you want to start plotting. Before we move on to the main entree, a quick word from our sponsor. First, a word from Moomoo and the up to 13 free stocks that you'll get when you sign up with them using our link down below. Let's face it, as retail traders, we are forced to go to mortal combat with big institutional players every single day, and we need to be yielding the best weapons available to us. While Moomoo is a trading app and a broker that serves as a fierce weapon and ally on the stock market battlefield, Moomoo allows you to invest in stocks, ETFs, options, and ADRs worldwide. It has a cutting-edge stock screener with 100 plus stock indicators to locate just the right trades that match your strategy. They have 24/7 premium news and alerts for free. This includes unlimited access to real-time news from leading financial media, curated lists of market highlights from Moomoo's editorial team, and an all-in-one market calendar for key events. It has free real-time level 2 data so you can see the order flow, daily short volume data from NYSE and the NASDAQ, advanced charting tools for serious traders including 63 technical indicators and 38 pro-level drawing tools. Overall, with Moomoo, you get a powerful trading weapon to help you fight in the stock market. And if you sign up with our link down below, you'll get up to 13 free stocks. Yes, that's right, folks, 13 free stocks to try out an excellent broker and trading platform. Thank you, Moomoo, for the sponsorship. Now back to the content. Okay, main entree, MNMD, MindMed, a company that makes psychedelics with the hope of treating addiction and mental illnesses, a company that has a drug in phase 2 trials right now in hopes to be effective against ADHD and generalized anxiety. And at a surface level, MNMD looks like a typical sketchy penny stock, right? And in my view, once you go beneath the surface, it still looks like a pretty typical sketchy penny stock. Although with an interesting idea if you look at some of the studies, but we'll see if they actually implement that. But the point is, we're talking about this as a short-term spec trade. So why is this even relevant? Well, to understand why this stock is relevant, you have to understand Mr. Jake Freeman. This is perhaps one of the more peculiar stories that I've heard, but apparently you have this USC math student, Jake Freeman, who made $110 million selling Bed Bath & Beyond shares before the shares plummeted. The 20-year-old invested about $25 million in the stock through his own fund in July and sold out at almost the perfect time. Now, where did he get the starter money? Well, according to Financial Times and eFinancial Careers, he raised the initial $25 million from friends and family with cash to spare. This is a big stinking note to all of you lazy people out there that say, oh, I don't have enough cash to invest. Why don't you go and frickin' ask your friends and family for some spare change? If they don't give you at least $25 million, then that just means they don't like you very much. But tangent aside, the reason this relates to MNMD is because Jake Freeman's fund disclosed they have a stake in them as well, which if anybody knows how the meme momentum trend works, if there is a way of knowing how it works, it tends to follow key figures of the meme movement. Anyone who has done well on a previous trade tends to get people following them next. And recently, Freeman and his uncle, Dr. Freeman, sent a letter to the board of directors at MindMed calling for the board to accept a new strategy that focuses on the company's core medications, reduces cash consumption, and ends an at-the-money equity offering. They actually have a whole website called mindmed.zone where they break down their main proposals, which are ending shareholder dilution, cutting excess spending, and zooming the LSD to market. And then they have their pictures and descriptions at the bottom. Scott Freeman and Jake Freeman, most importantly. Jake Freeman, again, being the guy that supposedly made $110 million profit on Bed Bath & Beyond. And quite frankly, the only thing red with this guy is his hair. His portfolio is apparently quite green. And digging a bit deeper, what gets even more interesting here is that his uncle, Dr. Freeman, was actually one of the original co-founders and former chief medical officers at MindMed itself. And now they are essentially submitting this proposal as shareholders, major shareholders, to not just request management do things differently, but also for him to be appointed to the board. So that brings us full circle to the actual setup here on MNMD. Essentially, in this stock, you have a super small cap with a history of pump and dump hype waves, all of a sudden getting covered by the likes of the Wall Street Journal because of its relation to the guy who made around 110 million bucks trading BBBY. On top of that, you have all of the Reddit retail heavy communities trying to find the next meme revenge stock, and this one seems like a natural next step for people who are trying to speculate on what's going to be bought after BBBY. On top of that, you also have Cantor Fitzgerald analysts coming a week or so ago and saying that they have a $3 price target and saying that their pipeline is currently underappreciated by investors. And then finally, to cap everything off and tie it all in a big bow, you also have a reverse split on August 29th, which tends to be a bad thing for stocks, right? Stocks tend to dump in the weeks and months after a reverse split, mostly because the whole point of a reverse split is making sure that your share price is going to be high enough not to get delisted, right? So essentially, when you actually do a reverse split, it's kind of like admitting that your share price is probably going to keep going lower. And thus, it becomes a self-fulfilling prophecy. But in terms of a trade, I mean, this does kind of create an air of urgency for spec traders who want to see this rally before the reverse split goes through. And then, of course, you have seen the options chain pre-split prices showcase people betting on prices going as high as $150 to $250 and even $7.50, which suggests that a large amount of spec traders are looking for substantially bigger moves because this is still trading below $1, at least right now. So anyways, conclusions. Well, MNMD has a solid chance of a catalyst pump prior to the split. I think this will be fun to trade off of, but it's not going to be fun to be stuck in, and you got to be very, very careful. I think this is one of those trades where if you want to play it, do a very, very small position, ride the wave, but get out as fast as possible, in my opinion. You can do whatever you want. You can marry it and have 15 kids. I just don't think that's a good way to do it. The short interest on this is pretty irrelevant too, and this is pretty small, and it doesn't have the characteristics of a traditional meme stock, so I don't think it's necessarily going to become a meme stock, more like a spec cap play that's relevant for perhaps a couple more weeks. So anyways, there you have it, my breakdown on MNMD. I don't have a position in it. There's no reason for me to say anything good or bad about it other than my true thoughts. Okay, catalysts and events this week. Monday, you have AMC's Ape expected to start being tradable. Zoom will be reporting earnings. Tuesday, you have Macy's, Nordstrom, JD, XPeng, and Intuit reporting earnings. Wednesday, you have the report on durable goods out. Very, very interesting to see how the economy is flowing, specifically in manufacturing and automobiles. NVIDIA, Salesforce, Snowflake, Splunk, and Box will be reporting earnings on that day. Thursday, you have Tesla's 3-for-1 stock split. And then the biggest event for the week will be the Fed's Jackson Hole Symposium. The Fed will be talking about the economy and its trajectory, and this will have a huge impact on the market. Any statement released from a Fed member to the press will be analyzed about 1 million times and will create some insane volatility. And then on Friday, you have Mr. Powell himself speaking. People all week will be speculating on what he's going to say, and there should be some serious market anxiety about whether or not the Fed is going to drop a bombshell at this symposium. Anyways, that caps off the video. Let us know what you are watching heading into this week. If you'd like to get up to 10 free stocks, actually 13 free stocks with Moomoo with our link down below, make sure to take advantage. If you are looking to get 50% off ZipTrader U, coupon code recession50 will get you that discount. And that caps off the video. Have a good rest of your day, folks, and we'll see you tomorrow.